Okay, just wait a few seconds while this gets set up by Zoom. And it looks like we are live, everybody. And we have 11 people joining us. You can give us a quick shout out on the live chat if you're here. But basically today is the second part of our presentation about institutional investor options for buying Bitcoin. And so today is going to be focused on Bakkt or Bakkt. I don't even know how you pronounce it, but I know everyone has heard about it. And Adrian, our one of the main influencers under Bitcoin for Beginners, is going to present today, just like he did last week. And then I'm taking over again, moving forward from next week. So without further ado, let's say hi to Adrian and just let him take the floor.
Hey guys, how are you all doing? Welcome to yet another presentation on Reddit R cryptocurrency. Let me share my screen with y'all so you can see. Do you have my screen, Kevin? Do you see my screen?
Yes, sorry, I was muted. Yes, I see your screen. It's perfect.
Oh, okay, great. So yeah, just oh wait. Okay. So last week we already talked about the different options that are already available. We talked about the custodian services, derivatives, and investment funds. And today we are specifically going to talk about Bakkt, and we are going to try to understand what they are doing. We're going to look at their institutional participation that they want to promote and the merchant consumer participation. And we're also going to take a quick look at some of the implications of the institutional involvement in Bitcoin investing. We're going to look at some positive things and some things that, might be a concern. First of all, I want to go through a quick recap of what we talked about last week in part one of this two-part series. So, yeah, let's just get started with that. So we talked about custodian services. Those are needed um, uh, a lot for specifically institutional investors because, yeah, they need a custodian service to store their Bitcoin, but they also need a regulatory environment to do so. And currently, there is not sufficient regulation and expertise in traditional finance. And the difficulty, as we all know, of private key management, protection, and storage, are some very specific cryptocurrency related problems. And those are even more an issue for institutional investors. Specifically because, crypto custody for large institutions are, of course, big honeypots for hackers. So, you need to be extra careful how to store your Bitcoin private keys. So, there are already some regulated custodian services. For example, Coinbase custody has some regulation. And their security model is that they store 98% in cold storage and only 2% in hot storage, which is also insured, with an insurance policy. And they have bank balances at a separated bank account. And they have a trading platform for institutional investors that's called Coinbase Prime. Then you have Gemini custody. And Gemini is licensed under banking law. They have capital requirements, and they have their own proprietary custody system. Another regulated custodian service is LedgerX. They control a options exchange. They're not the same as the Ledger Nano S hardware device. It's a completely different company. But LedgerX has a CFTC registered derivatives clearing organization license. So also that is a service that can be used by institutional investors. And there is a new service coming up, which is called Bakkt, which we're going to talk about today. And there are other custodian solutions, like, for example, the Ledger Vault device, DAC, BitGo, who have cold storage in bank-grade Class 3 vaults, and you have more services as well. On the derivatives market for Bitcoin, we have for derivatives different use cases. You can either have leverage speculation on the price without owning the assets, or you can use derivatives for hedging and to protect your assets value for a better risk management. The total derivatives market is 540 trillion in represented underlying value, although 20 trillion is only the value to replace all existing outstanding contracts. And to give some scale to that, the gross world product is 80 to 90 trillion dollars on a yearly basis. So yeah, those are huge numbers. One type of derivative that we can use are futures, and futures are an obligation to buy or sell a commodity in the future against today's price. And a future, the price difference will be your profit loss. And with the future price difference, I mean the price on settlement. The price difference between today and the day of expiry of the future contract will be your profit or loss. And those are usually physically settled, but for Bitcoin at the current moment, those futures are only cash settled. Currently, Bitcoin futures are traded on the CME and CBOE exchange, and twice per month they have expiration of the future contracts. And twice per month because obviously they are two exchanges. And soon there will also be futures by Bakkt. Options that are available for Bitcoin, that's also a possibility. You have premium right to buy and not an obligation to buy or sell at the insured strike price during a period. And the other side of the option contract is the seller or the writer, and he receives a premium but has an obligation to sell or buy at that same strike price when the option is exercised by the premium buyer. So currently only on Ledger X exchange you can trade options, but you need to be a $1 million plus client to trade those options, and they have daily, weekly, and monthly options available. Then we have investment funds. The longest existing is GBTC, which is for which you can buy shares in the investment trust. And in total, this investment trust has 175,000 Bitcoin in storage. There are no arbitration possibilities for this investment fund. So usually the fund trades at a higher premium or a lower discount compared with the price of Bitcoin. And above that, the price development may be inconsistent with Bitcoin's own price development. Until recently, this was the only option for investment in Bitcoin through the traditional system. Then we have the ETFs that are currently in process, but we still don't have them yet. An ETF stands for Exchange Traded Fund, and they are shares that are backed by another asset, and they give exposure to the price. And they can be a regular ETF, which is like a one-to-one, a leverage, which gives you a leverage position against the underlying assets. You can have an inverse ETF, which means that the price of the ETF will move in the opposite direction of the underlying asset. It can be in a basket, or they can use specific derivatives. With an ETF, arbitrage is easier, and that means that ETFs usually trade at a smaller premium or discount as a normal investment fund, like, for example, GBTC, and it also would follow the price more consistently. Lately, there have been some ETFs applied for and denied, which are the Winklevoss ETF, very famously. There were some leveraged and futures-based inverse ETFs. They were also denied. The only one that's currently still in process with the SEC is the SolidX and Van Eck, which is a physically backed ETF, and it's supposed to have an insurance. And the size of the ETF would be 25 BTC per share of the ETF, and with a price around $8,000. That would be around 200,000 that you need to put on a table to buy one share of the ETF. And if that SolidX Van Eck ETF is going to be launched, they will start out with only 100 shares, which is still a $20 million more or less value. Again, assuming a price of Bitcoin around 8,000. Then there was another option for investment funds, and that was the exchange traded note of the Sweden XBT tracker, which was since August 2018 available in US dollar. And even though US investors could buy it in US dollar, they were ultimately settled in euro or Swedish krona, of which it is originally listed on the Swedish exchange. So besides the risk exposure to BTC, you would also have some currency risk for the exchange rate against euro and Swedish krona. And one share is either $35 or $350, depending which one of the two you would choose. However, that one, it was last Sunday, the 9th of September, suspended by the SEC, and the suspension will last until the 20th of September, because according to the SEC, there was a lack of current, consistent, and accurate information concerning this Bitcoin Tracker 1 ETN, and that resulted in confusion amongst market participants regarding these financial instruments. And this is from the official SEC order. They stated that broker-dealer application materials, certain trading websites characterize the ETN as an exchange-traded fund, which would officially be an ETF, and other sources contradicted it by saying it was an exchange-traded note. And by the issuer itself, it was stated as a non-equity linked certificate. So because of this inconsistencies and opposing information, they decided to suspend it until there was more clarity on the issue. So that was about the investment funds. And let's continue to the next thing. And that's actually quite an interesting project, and that's Bakkt, that was recently announced. And first to say that it's pronounced as Bakkt, which is a wordplay on backed as in asset-backed securities. They call it a global regulated ecosystem for digital assets. That's what it's supposed to be. And it's a partnership between ICE, which is Intercontinental Exchange, which is the parent company of the New York Stock Exchange, and between Microsoft and Starbucks. And ICE is the world's second largest owner of financial exchanges by revenue. It's also the world leader in futures for agricultural commodities such as sugar, coffee, and cotton. And ICE took already a minority stake in Coinbase since 2015. And Coinbase is obviously the largest US crypto marketplace. And another important aspect of ICE is that it's ICE Future Europe is the dominant global marketplace for the Brent crude, which is the global oil price benchmark. So this is a huge player in the financial industry. And then we have Starbucks in this partnership, and they will facilitate that we can finally buy that coffee with our Bitcoin. And they want to going to use practical, trusted, and regulated applications for consumers to use at Starbucks. However, the downside of this is that the BTC that customers would spend at Starbucks will be immediately sold for US dollar in the ecosystem backend. And for that, they will use the daily futures, which are we going to talk about soon after. But it's the aspect of Starbucks in the partnership is to increase consumer and user adoption. And then we have Microsoft. And Microsoft has the Azure cloud business, which is a huge base of retailers. And they handle back office tasks from invoicing, processing, and e-commerce solutions. And merchant adoption would be increased with this partner by onboarding more merchants, and combined with the solutions for accounting and payment processing. And more merchants means more users, and more users means more merchants. And in this way, they want to increase the feedback loop. So what are the goals for Bakkt? According to the Bakkt CEO, Bakkt is designed to serve as a scalable on-ramp for institutional, merchant, and consumer participation in digital assets by promoting greater efficiency, security, and utility. And they want to use Bitcoin as the disruptor of retail payments. And one of the things they want to promote is to transfer consumers' behavior from using credit cards to scanning Bitcoin apps for payments. And they're going to introduce a new ecosystem that provides Bitcoin with the same protections as stocks, bonds, and commodities futures traded on ICE exchanges, which would open doors for the large potential of institutional investment, which would be much greater than the current small group of retail customers and risk-taking hedge funds, which are currently the biggest part of investors in Bitcoin. Which are some of the problems that they recognize in the current Bitcoin ecosystem? They say institutions, merchants, and regulators don't trust Bitcoin. And that's due to a lack of trading on an official regulated exchange, lack of safe regulated storage for digital currencies on an institutional scale, and that Bitcoin currently is primarily used for speculation, and that it has a difficult liquidity because Bitcoin trading is currently across many exchanges across the world, and on each separate exchange, the liquidity is not very high. So it's not easy to process very large trades in Bitcoin without very much affecting the order book of each individual exchange. And we have seen 4 bear markets in less than 10 years, which results in a crisis of confidence, specifically for institutions and regulators. And they state that millennials don't trust traditional financial institutions. And to gain their trust, they want to try to persuade them by offering services around a currency that they do believe in, like Bitcoin. However, Bitcoin is designed to be decentralized and to not have intermediaries taking fees. But Bakkt say that in order to succeed, that a strong central infrastructure is paradoxically needed. But because the challenge is getting the banks, asset managers, businesses, and consumers and regulators to embrace Bitcoin. So, to summarize it, the roadmap for Bakkt would be a phase one operation, which would be the institutional investor campaign, which should facilitate price discovery by institutional investor accessibility. And the first step in that process would be the daily futures market. And phase two of the roadmap would be improving the way consumers pay at the mall, but also online. And for this, they want to increase merchant adoption, for example, by the Microsoft and Starbucks cooperation. And they want to improve the financial ecosystem in the back end. So, with user adoption by more merchants, plus more simple payment solutions and safe regulated storage.
Quick question about that, by the way.
Yeah.
Did they ever say how long that roadmap's supposed to take?
No, actually, like phase one, they were pretty clear about. They are now in the process of getting the daily futures approved, which should be a matter of weeks.
Oh, okay.
That process will start. The rest of the roadmap is not very clear yet.
Okay, because I was just wondering when we can buy coffee with Bitcoin. That'd be cool.
Yeah.
That'd be super cool.
Yeah. Everyone's waiting to finally buy that coffee with Bitcoin, right?
Yeah, just for fun though, not because we actually need to.
Yes, exactly. So so the first step of the institutional investor campaign are the daily futures. Those are daily expiring, but now physically settled futures. And that should facilitate a thing called next day Bitcoin. That they are traded on ICE electronic trading platform, and they will be physically delivered in ICE regulated digital asset warehouse, which means that if there is a trade is being done on the exchange, that means that in their digital asset warehouse, they will move the Bitcoins from one account to the other. So that means that real Bitcoin will be transacted for settlement, in contrast to the CME and CBOE futures that are cash settled only. The contract size for the daily futures for one contract will be representing 1 Bitcoin, and it's pending CFTC approval. And they will also have a separated guarantee fund, which is funded by Bakkt. So the Bakkt ecosystem would transform Bitcoin's architecture to run at high speed. They will have settlements between accounts on the ICE exchanges, and it would function as a layer above the blockchain. The ICE ledger will be apart from the blockchain. And when people take money of Bitcoin out of the Bakkt ecosystem or put money into the Bakkt ecosystem, only at these points there would be transactions on the blockchain, but all other transactions and settlements and trades will be happening on the ledger of ICE. So in fact, they say it's like the institutional regulated version of the Lightning Network. As an example, for example, a US company buys a product in Japan. The traditional method would be that US dollar had to be traded by a broker dealer for yen. Then it would be sent from the buyer's bank with a 2 days transfer to the seller's bank, and it would all amount to large fees and also interest to pay. But on the ICE Bakkt platform, the buyer's vault account would just be transferred the funds to the seller's vault account, which would happen almost instantly, and it would be much faster and cost less dollar. So Bakkt would be Bitcoin to greatly simplify the movement of global money, and they believe that it has the potential to become the first worldwide currency. So they are very, very bullish on Bitcoin. And with this ecosystem, we actually want to help improve Bitcoin adoption on various levels, but starting with the institutional investors. So what are some positive things about the institutional involvement and adoption of institutional investors? First of all, it would generate giant trading volumes, which would lead to a higher volume by institutional buying and selling, which should lead to smoother prices. Derivatives might help to take out the edges of volatility because of a better hedging options for investors, so there would be less need for panic selling. And for merchants, it would be more attractive to accept Bitcoin if prices are more stable and the possibility to hedge exchange rate volatility risk, so risk they can manage their risk better and their cash flows. And there would be more and easier access as a financial investment, and that may also increase the credibility and reputation for more user adoption. So more users and more merchant adoption, plus more institutional demand, should lead to higher prices, as many should expect. But of course, there can't be any certainties about that. So what are some concerns with this institutional involvement? Like, for example, with if you invest in an ETF, or if you use futures to have exposure to Bitcoin price movements, like what would happen with forks? You would not get your forked coins because they would be officially in the hands of the custodian of the Bitcoin, obviously. So that would be a concern. And for example, if there would be a chain split and the other chain would continue to exist, be a valid chain, which one would then be the blockchain that is backed by, for example, the ETF? Those could be concerns that come up with relates to forks and holding Bitcoin in a custodian system like an ETF or the system that Bakkt proposes. But there is also an inflation of supply, because Wall Street can create claims to Bitcoin out of thin air by leveraging with derivatives, or the possibility of shorting the ETF shares, for example, because shorting ETFs create more shares in the books that are actually issued, which would lead to price exposure to Bitcoin, which are unbacked by actual Bitcoins. And this leads to an offsetting of Bitcoin scarcity to some degree, which obviously is not a good thing, because there would be much more theoretical supply where people can invest their money, while it's not actually affecting real Bitcoin price. And in a centralized system like an ETF fund or a Bakkt ecosystem, it's obviously not censorship resistant, and it's definitely not decentralized. And as Andreas Antonopoulos described it, it's a giant, not your keys, not your Bitcoin vehicle. And there is a counterparty risk as well, because the real irony is that the price of gold, for example, could be skyrocketing, and the ETFs could be going bankrupt at the same time. And that's all because of the structure and the counterparty risk that's involved with, for example, ETFs. And it opposes the real purpose of Bitcoin, and that was not to be part of a financial system. And you can have situations where there is a lot of hype, which would be followed by sell the news and people at the end losing money again, like we have seen before. Like when the futures were announced, which you can see in this graph, the price went up skyrocketing, and when you actually started trading, we actually started the bear market. and a lot of people lost their money. And the same thing more or less happened with the last ETF hype, where the price was going up a lot in August, and when the ETFs didn't really got approved and denied or delayed, there was a lot of disappointment and prices going down again. And this obviously could happen again whenever ETFs are approved after all. So the thing, for example, with Bakkt is that Starbucks coffee would sell their Bitcoin immediately. So that means that buying coffee would actually negatively impact the price of Bitcoin. And that also means that if more merchants start participating in the Bakkt ecosystem, there would be more companies accepting Bitcoin and selling them immediately for US dollar, which midterm would have a large negative impact on the price. However, if you look at the longer term, more businesses accepting Bitcoin, plus a price that would become more stable, and the back and entire Bitcoin ecosystem would be growing, and more merchants accepting, but now hodling their Bitcoin to spend it and not to sell it. That would hopefully, on longer term, be a more positive influence on the price of Bitcoin, but probably midterm it wouldn't be. So that was it. If there are any questions.
A few people kind of wrote stuff in the beginning, but we still have some people on the stream. If you guys have any questions, feel free to type it right now or just leave it down below later. I only have one question after learning about Bakkt. So what are your overall thoughts? Do you think people should be excited about this, or should we look forward to other stuff instead, like the ETFs or whatnot?
Yeah, well, probably ETFs are going to have a much more short-term effect on the price, because there's just a lot of hype around it.
Right.
Around Bakkt, there isn't that much of a hype, and the project will roll out over a longer period of time and will not be as big as an ETF potentially might be, but long-term, for more adoption within the institutional investors, the fact that ICE is such a big company in the traditional finance, that could all have a very positive effect for regulators, more institutional investors coming in, more merchants coming in,
Right.
which could help the Bitcoin ecosystem grow much faster. And ultimately, its actual use of Bitcoin is going to be very important for the actual price and valuation of Bitcoin.
Makes sense.
So the only problem, like what I mentioned, if there is too much Bitcoin in that ecosystem, it completely loses its one of its core values, which would be censorship, resistance, and decentralization, and permissionless interacting with the system. So what I personally would hope is that there would be this ecosystem, for example, from Bakkt, where large corporations and institutional investors have an easy way to interact with Bitcoin, and that on the other side we would have like the normal Lightning Network for smaller retailers and normal retail investors and individual users that are just going to spend their Bitcoin or transfer the Bitcoin over the normal Lightning Network, but that we at least hold a larger part of the Bitcoin outside of such an ecosystem, which is also that what some people would expect, because most of the hodlers are not very interested to send their Bitcoin to such a giant not your keys, not your Bitcoin
Yeah, that makes sense.
vehicle. So that's my sort of take on it. It's going to be good for the whole ecosystem long term, but hopefully it's not going to swallow the whole Bitcoin ecosystem, because that would kind of defeat its purpose.
Yeah, makes sense. All right. Thank you for that. I think we are good. And we will see you guys next week with some more interesting topics. I think I'm going to do a deep dive on one of Reddit's favorite projects, whether that be like VeChain or Nano or whatever. But yeah, stay tuned, subscribe, give us a like. Thank you all for joining us. We had like 12 people watching, 8 right now, but that's it for now.
Thank you all. Have a nice evening.